So, Amber Matherne, how are we doing today?
I'm doing well. I'm happy to be here.
Absolutely. So, welcome to our fourth episode of Embracing Success. You're a real estate agent in Tampa and absolutely crushing it, right?
I am.
Plus, you have a little bit of your own successes in real estate, which
Yeah.
is really surprising because I feel like, at least what I see on the news, is like kids are living with their parents all the way till they're 30 years old.
Yeah.
Um,
Which isn't a bad idea if you can do that. I mean, you're saving a lot.
I don't. Maybe that works for or for girls, but it definitely doesn't work for
Yeah.
boys.
No, I couldn't do it either, but if
Yeah.
you can, you're saving.
It's tough to be on a date and be like, yeah, we're gonna go back, hang out with my place. My mom just made us fresh cookies, so it's gonna be great. So a little bit of background: you moved here specifically for college, right?
No,
Oh,
I grew up in Tampa.
oh, you grew up in Tampa. Okay. How old were you when you moved here?
I was in the fourth grade.
Okay.
I grew up in West Chase area, so not too far from here, but
So you've seen quite an evolution of what Tampa was
yes.
to what it is now.
Yes, I remember growing up, I don't know why, but my mom and I, we used to go bowling, like for fun on the weekends. And in Channel Side, where Sparkman Wharf is now, there the Splitsville has been there forever.
Yep.
But that's all that was there. And the aquarium, there was an IMAX theater. I don't know if that's still there, but that was all that Channel Side was. And so we would go. There actually used to be a Hooters too. So.
Is Splitsville, is that like the best bowling alley to go to around here?
It's cool just because it's not a normal bowling alley and there's waitresses, waiters, and
Yeah.
food and drinks, but I would say it's a pretty good one.
Are you Polish?
I don't
Have you ever
think
heard
so.
that Polacks bowl?
No.
I think I was on a bowling team when I was a little kid too. I don't think I'm Polish, but it's fun. It's fun.
I got pretty good at it. I haven't done it in 10 plus years, but
Yeah. Um, so what do you see moving forward? Do you think that I mean, from what I've seen, they're expanding the River Walk and everything else, right? So there's a lot
yes.
more future growth for Tampa.
There is, which is exciting. I think we just have some things to figure out with transportation and all that. But yeah, the Riverwalk's going to get expanded north, which will be awesome for anyone in that just north of Armature Works area. And then even on the west side of the river, there's not much walkability on that side, but there will be pretty soon. So that area's grown so much and it's just going to continue to go up.
So one thing that I like to ask realtors that are from here is what do you think the next up and coming area is that isn't overpriced yet, or maybe it's not really seen, but you feel in the next 5 years or so it's gonna definitely be a hotter market.
What's happened so far is things just keep slowly moving north and north. So it's kind of tricky where even now, Armature Works area, Tampa Heights, and then Seminole Heights, those are borderline not affordable anymore. They're just
Yeah.
as expensive as down here. So if you keep going up, there's like Lowry Park Zoo area and then Carrollwood, and that is still it's more or less affordable. So I think if you just keep going up along the Riverwalk, you're still super close to downtown. You're super close to what's going to be expanded on the Riverwalk, and the prices are currently more reasonable than as south as we are down here.
I gotcha. And what's your favorite part of Tampa?
That's a good question. What's not to love? I mean, it's cool because we're on the water, but we're not. A lot of people think that come from out of state, they're going to move to Tampa and be at the beach all the time and have this
No, there's
super
no
beachy lifestyle. Yeah, that's not the case. But we are 20, 30, 45 minutes away from the country's best beaches. So you have that option, but you can still get the city feel and vibe, but also not too much of a big city. Like we're not competing with New York City or Atlanta or things like that either.
Yeah, it's weird because I moved to Channel Side. I mean, I moved to Channel Side strictly on the notion of I want to be around young professionals, and I know that
Yeah.
it's a busy city in that aspect. But to move, I would probably be up towards like the Tampa Heights area.
Yeah.
I feel like I like that.
It's awesome. It's just I think you miss the wave a little. If you were in there 2 years ago, it
I
was.
moved here 3 months ago.
I
So.
know. No, it's awesome. There's still a lot that is affordable there. There's just also a lot of new construction going up.
Yeah,
So.
I just think that I hate that I can't. Like, I went to the dry cleaners yesterday and I couldn't park my car. I parked illegally. I didn't use a little.
Which dry cleaner did you try to go to? In Channelside?
Yeah.
Oh, okay.
I don't know what it's called. It's right by my place.
Well, I mean, I live over there too now, and if I'm going to drive, I'm going out of downtown.
Mm-hmm.
So I'm going to go find a dry cleaner 10, 15 minutes away that I know.
Yeah, I was nervous. It had 2.9 star reviews.
Oh, gosh. I'll give you the first one. Actually, on Harbor Island. Is it Harbor Island? Maybe it's Davis Island. One of them.
Okay.
So it's still close to you, but when you get there, you can
probably
park.
there,
Yes.
not illegally.
Yeah.
That's good.
They're pretty good.
That's good. So did you go to college here?
I actually went in Tallahassee to Florida State, so 4 hours north of here. Not too far, but
So are you a Gators fan?
no. No, definitely Seminoles all the way, but I loved FSU. I didn't think I wanted to go out of state for school, and so I didn't anticipate going there in high school, but I'm really glad I did. It worked out so well. I loved it. The major I had and the program I was in at Florida State actually had one of the best in the country. I think we were like number 7 in all the country for that. So I really liked it.
What was your major?
So it's called actuarial science, which most people have no idea what that is.
Nope.
It was under the Department of Mathematics. So I'm definitely a math, numbers girl, super nerdy. I love numbers though, and actuaries, which is what my original profession was, is the person who traditionally works for insurance companies. They do all the math, evaluate all the risk to come up with the numbers that insurance carriers will charge their customers on their premium.
Mm-hmm.
So basically, I did a lot of health insurance. I was in that world. So basically, how risky is this person? How much are they likely, or how often are they likely to go to the hospital, go to the doctor, need medication, need surgery? All those things go into play when you're deciding how much to charge them.
I got you. Yeah, health insurance is pretty crazy. So is homeowners insurance.
Yeah.
So you actually got a job in that right out of college?
Yes. My original internship was all homeowners, which was helpful for me in the long run now that I'm in real estate, because I do understand all the factors that go into what they're going to charge you and how they come up with that rate. But for 4 years, I was an actuary in health insurance world of things. So
I gotcha. So what made you transition into real estate?
really, I always had an interest in real estate. My grandma and my mom actually, neither of them are realtors, but they had actually a bed and breakfast business in the town I'm from in South Louisiana. So they've always been in, I guess, the hospitality, real estate side of things. And then when I first graduated from college, I moved back to Tampa, and I kind of just started looking. I'm like, oh, if I could buy something one day, where would I want to live? What would that look like? How much would that cost? And trying to start planning for that, because assuming that would be kind of like 5 years down the road, and just to have some goal to look forward to. And what I realized is that dream and goal was a reality it was more feasible a lot more quicker than I thought it would be than 5 years down the road.
For sure.
So my whole first time home buyer experience was very interesting, and I learned a ton, and it's totally what ultimately led me to getting my real estate license.
Yeah, it's funny because I actually just helped someone with some information the other day, but I don't remember what first-time home buyers normally think, in the sense, just because I think they feel that it's a daunting task, or it requires a buttload of money to get into something. Do you remember what you thought, why it seemed so far out of reach, like why you can't just buy something as a first-time home buyer? Is it because you think you have to put 20% down? Is that kind of the stigma with that?
I think so for me, which I had a unique experience, but for me, I was so excited about it. I
Hmm.
wasn't actually too concerned with that until I put um, an offer on the house I ended up buying and it got accepted. And then I was like, oh crap, like this is real.
Hmm.
And I think that's what a lot of people feel before they even start looking is it's a big deal. It's the biggest purchase if you're a first time home buyer at least, it's the biggest purchase you've probably ever made in your entire life. It's a lot of money and it's a big commitment in the sense that you are a homeowner and you're going to be moving into this new home and you want to make sure you like it. It's not a lifelong commitment or anything, but it's a big deal. It's something most first-time home buyers haven't done anything that it's that big of a commitment until then.
Yeah.
So there's that, and then I did the research on the front end to realize that I didn't need boatloads of money to do it. And so I think a lot of people don't get past that point. They don't even consider it. They don't look into it because they just kind of have that assumption.
Hmm.
So it's fun to educate them and get them to see it's not totally out of reach or years down the line like they may think.
Yeah, one of the other things that people don't really think to do with their first purchase too is check out your neighbors.
Yeah.
I was fortunate when I bought my first place. My neighbors were like super quiet, so they didn't really say anything. But I mean, I was 24, I think, when I bought my first place, and I was not a good neighbor. So I'm very fortunate that they were
Was
just.
it a house or a
Yeah,
townhouse
it
or?
was a house,
Okay.
and I was going to Florida Gulf Coast at the time, so I was like right on the, I don't know, like 5 or 7 minutes away from Florida Gulf Coast. But yeah, I mean, I was not a good neighbor, and I think I had a little old couple on one side and then like a Hispanic couple on the other side that never really bothered with me at all. So maybe I was,
They were probably avoiding you.
yeah, I was the bad neighbor. Um,
That is a good point though. And it's something you really I mean, you could go knock on the neighbors' doors and try to talk to them and see what they're like, but
or just circled the neighborhood a few
circle the
times.
neighborhood and go see the house more than once.
Yeah, because you might get the neighbor like I was at 24, and you
Yeah.
know.
But also once go during the day, go at night, go during sunset, maybe go on a weekend,
Hmm.
weekday, get a feel for it cuz I mean for me I was so excited and I'm more on the impulsive side of things. So I wasn't doing that type of stuff. I think I saw it once and then put an offer that day.
Yeah.
So
So where was your first place at? You said it was a condo?
it was technically a condo. If you saw it, you would think it's a townhouse. It was a little, it was only 10 units. So unique type of condo, which also made the financing portion a little difficult. But it was right in Hyde Park,
Hmm.
which, again, this is where I did my research on the front end. I would have never dreamed I'd be able to buy my first place in Hyde Park. I still wish I lived there. I mean,
Should have kept
it's
it.
yeah, we don't need to talk about it too much. I get frustrated with myself, but I would love to live in Hyde Park again one day. Like
Yeah.
most people in Tampa, that is a great area to be. The great best schools in the town. I mean, of course you're right next to downtown, but you're still a little mile-ish away and you're in a safe neighborhood. You're right next to Bayshore. So you aren't directly on the water, but you can feel like you're on the water and get some of that Florida living feeling. And then, of course, Hyde Park Village, which since I even lived there, and especially since when I was growing up, it's awesome now. There's so many new restaurants, new shops, new places to work out. It's awesome.
Yeah, come to think of it, I do think Hyde Park is probably the ideal place, but there is definitely a luxury tax to live over there.
Yeah.
Um,
But
like
if
I don't
you
even know if
go,
you can find anything under $1 million over there now.
well, what I bought would still be under $1 million for sure. But if you are right north of Swan, so Swan is kind of like cuts Hyde Park Village down the middle, um, just north of Swan, but south of Kennedy is where, and I didn't know this until I started looking. So um, there's a good amount of small condo complexes or townhomes or duplexes, and you get that historic Hyde Park feeling, but you don't have to purchase $1 million home to be there.
Yeah.
Some of them are upwards of $1 million now, but those are the bigger ones. I had a little 2-bedroom, 1,000 square feet humble abode.
Yeah. So condos are great, and I think what we were discussing prior to you coming on here was your nightmare experience with the condo, which
Yeah.
I never knew about until you get into mortgages, right? It's like the thing that people don't talk about, and it's something silly. It's called a non-warrantable condo.
Yes.
Which basically means that Fannie Mae and Freddie Mac will not allow for this due to certain things that happen with this condo. Like it's owned by investment property, primarily investment properties, or one investor or LLC typically owns a majority of the stake of these properties. But what that means is that as a first-time home buyer, right, you could typically do 3% down or 3.5% down FHA.
Yeah.
You can't do that with a non-warrantable condo. No. So you were saying, tell me a little bit about that nightmare.
So, of course, I had no idea what everything you just said, no idea what that meant at the time. Had never heard of any of those things before. And I actually, when I was buying my first place, did not have an agent. I was just calling each listing agent that had whatever I was interested in listed, giving them a call saying, hey, I want to come and see it. And so I didn't have someone educating me about those things along the way either. Never thought that was a risk. I find the place that I ultimately ended up buying, and we're under contract it was a longer close because I hadn't started my full-time job yet. So I was approved for the loan, but I couldn't close until 4 weeks after I started working.
Did you have a buyer's agent, or did you do this with the listing agent?
All with the listing agent, which was difficult in a lot of ways. It's a case-by-case situation, but I learned so much not having a strong, trustworthy agent representing me is what I'll say. So I was approved for the loan, put the offer in, went under contract.
On a conventional loan.
No, it was an FHA.
Yeah, well,
loan.
yeah. I mean,
I was
like a
putting,
traditional loan.
Yes, I was putting around, I think my plan was around 5% down. And so, that's what I was saying. It was a 60-day close. So I had time to of course I had to get the inspection pretty early on, and then the bank was doing the appraisal, but all this was happening, and a month went by being under contract, and I was getting so excited, emotionally investing in this place, picking out furniture. I went to that place while we were under contract 2 or 3 times to take measurements. I had a flooring guy go because I was going to redo the floors and all this stuff. So thinking everything's good to go, a month into the escrow period, and that's when I get a call from the lender I was using at the time that they were not able to finance this house in any way. So it wasn't just I couldn't do an FHA loan. I couldn't get a conventional loan. I was out of luck with them. And also, since it was unwarrantable, and we can go into the reasons why this one specifically was, but since it was, they basically were telling me, we don't recommend you buying this place. I don't think it's a good idea. And me...
Who was saying that? The lender?
The lender.
Okay.
They were basically just trying to explain to me their personal concerns in a way with buying an
That means they already had the answer
condo.
and they didn't have an outlet for you.
Yeah. So, of course, it was disappointing. I was so upset. I was like, I don't know. I called my mom freaking out. And of course, she didn't know what that stuff meant either because she's purchased homes before and sold homes, but she never owned a condo. And so it wasn't anything that either of us had any experience with. But again, I didn't have a buyer's agent that was really just had my best interest, was just representing me and wanting to make sure I figured out what needed to be done. So I just took matters into my own hands, and I started calling every lender in town. Like, I think I talked to 20 people that day.
Did you know why the other lender, did they give you an answer of why they couldn't
first,
qualify you, or
At first, I didn't understand it.
were you just like, I need someone else to figure this out?
Yes, and I was using a smaller credit union that, so I kind of just jumped to the conclusion like, oh, it's just them that won't do it. So then I start calling other people, and thankfully I got in touch with some pretty good lenders that did explain to me what it all meant, why it was unwarrantable, and like I said before, it was only a 10-unit condo
Sure.
building. So do you want to explain one of the rules, which is
Yeah.
that a certain percentage?
I guarantee you, whoever built the condo probably owned the majority of the units, and he uses them as rentals or whatever else. So
Yes.
one entity or LLC or corporation or specific individual cannot own the majority of the units, or I think it's like 10%.
I think they can't own more than 10%.
Yeah, more than 10%, and then furthermore, it would make it non-warrantable if over 50% of them are used as investment properties.
Correct. And both of those situations were what was going on. So since it was only 10 units, if one individual entity owned more than one unit,
Yeah.
it was unwarrantable. And the same person owned 8 out of the 10 units. And those 8 units they owned were all rented out.
Yeah.
So ended up being me and one other individual owner.
Yeah.
But
And the reason why that would be non-warrantable, right, is because there's something called your reserves and stuff, right, that these condos have for repairs and stuff. If one person owns the majority of them, or a big chunk of that complex, I mean, it doesn't have to be 10 units. It could be 300 units, and they own 30 something of them. But if one person starts defaulting, like let's say they go bankrupt or lose all their money and they can't afford to pay into that reserve, well, now it affects the entire complex, right? Because now you don't have enough set aside for if you need a new roof or structural work or something like that. But that's the issue.
which makes a lot of sense.
Right? Whereas if you have 10 individual owners and one person goes out, but they only own one unit, well, you got 9 others. But if one person owns 8 of them and he goes out, well, now it's just up to you and the one other neighbor that has to take care of everything, and that's kind of crazy.
It's all just about diversifying your portfolio.
Correct. Yes.
Don't want all your eggs in one basket.
Yeah.
So that was, again, explained to me, but I'm like, I don't care about this. Like, I'm already set. This is my house. This is my condo.
It makes a big difference to you because a non-warrantable condo would have to go to what they call a portfolio lender, which is like a private group that finances these things into a portfolio for a diversified investments that they have. With that, though, they require 20 to 25% down to do this. So you said originally that you were thinking 5%. Well, now they're like, hey, I need 4 times that amount.
Yeah. So that's what I had to do. I got a portfolio loan. And it took me probably 20 to 30 calls later that day to figure out that was my only option. And again, and this is something I would definitely try to protect a client from now, but I was so emotionally invested in this place. So thankfully, I had a lot of money saved up. I mean, it was my whole life savings at the time. I was able to put the 25% down. But that was the last penny to my name, basically.
Yeah.
But I didn't care. I wanted to do it. I was determined, like, this is my home. Like, I wanted it so badly. And one other thing I want to mention that was mentioned to me, but I wasn't thinking about it too much at the time, was with the whole 10% rule we were just talking about. Not only if someone defaults or they can't pay their mortgage or the HOA fees, whatever it may be, if there are certain things that go into changes within the association, that one person has in my situation, it was whatever they wanted. I was totally at mercy to them. So if the HOA, that one individual owner wanted to increase the HOA to 200% one year. They could have done it, and
Mhm.
I would have been able to cast my little one vote,
Yeah.
but it wouldn't have mattered. And that was a big thing that I think a lot of people I was talking to tried to warn me about.
Yeah. So I think the biggest fault, or the person that should have been most held responsible for that, was the actual agent on that part. If
Yes.
you're ever a listing agent, especially when you're representing the buyer, you better know that property inside and out. She should have known that was non-warrantable. That should have been,
Yeah.
because that's one of my first questions. Typically, if I see a unit that's super cheap, right? That's one of my indications. Like if it looks like an apartment or something like that, you can kind of tell if they're non-warrantable just by looking at the pictures. But I mean, she obviously had
It was a he, but yes.
or he had a relationship, I'm assuming, with the builder. Was it the builder selling the property, or was it
No,
someone
it
else?
was an individual owner. What had happened was, and because I ended up doing all this research on my own, the person before me that owned it had purchased it in cash, and I think the person before them also purchased it in cash. So, did the listing agent know the full situation when even taking on the listing? I don't know. They should have known. They should have done their research on the condo, but if it had never come up before and they weren't doing their due diligence, they might have truly just not known. So, and then what ended up happening, because I did eventually sell that condo about a year later, the person who bought it from me purchased it in cash, and we had a lot of offers at the time, and we knew going into listing it that more or less like it needed to be a cash buyer. We weren't going to just advertise it to cash buyers, but we knew it was going to be difficult for someone else to get financing. It's possible. I did it,
Yeah.
but it's not ideal.
Yeah, and there's nothing wrong with it, a condo that's non-warrantable. It's more set up for an investor, right? Which banks don't
Yeah.
like. Like they have, after the crash in '08, the Dodd-Frank Act set up all these things in place to protect people from defaulting and losing their properties, like we saw.
Yes.
So with that being said, do you believe buyers should consult with a buyer's agent, or do you think going directly to the listing agent is the way to go?
It depends. I mean, I already said this, but it's totally a case by case basis. I think as a listing agent,
That's why I threw this at you, because you
yeah.
like to be a listing agent.
As a listing agent, of course, I'm happy. What happens is you would transition to being a transaction broker. You
Sure.
are not a single agent to your seller. You are a professional agent representing the transaction as a whole. So you're not on either person's side, you're on the transaction side, and you're on closing that transaction. If there is a professional, experienced agent, they're more than capable of handling that and making sure all parties involved are treated fairly and happy, and things can go very smoothly. Unfortunately, that wasn't the case for my first time home buying situation, and I I would have, yes, I would have been better off with a buyer's agent. However, I took the responsibility on myself because I just felt like there wasn't someone just in my corner, like with my best interest. I had that feeling the whole transaction even before anything started to go wrong. So that forced me to do a ton of research and reach out to, I mean, basically anyone and everyone I knew, whether it was some of my parents' friends, my friends' parents, other agents I knew. There was this one agent I reached out to who does vacation rentals on the beach, and I was talking to her, and she was trying to give me advice but didn't have much experience either. And ultimately doing all that research and learning so much from it, and really just not, I didn't care what was going wrong in that transaction. I just knew I wanted to buy that house and I wanted to get it done, and I did whatever I needed to do to get it done. It's why I decided to get my real estate license and go into real estate, because I mean, it was stressful at the time, but it was kind of fun. I learned so much.
Yeah.
And
Well, it's super fun too when you don't have all of the hurdles to jump through and it's smooth, right?
yeah. which
But
I thought every transaction was going to be that difficult.
You
so.
had a nightmare because you also said that it appraised low.
Yes.
Or was that a different property?
No, that was that property. So, again, I did not have an agent explaining to me. The biggest thing is every point of a transaction, there's room for negotiation and there's room for any aspect of it can be negotiated. No one was telling me that. So at first the appraisal came in, I mean, I want to say 30,000 less than we were under contract for. And at the time, again, I didn't care. I was buying this condo. This was my house in my brain. So I'm like, okay, like no big deal. Like I don't care if I'm overpaying 30,000. I want it. And so finally, I had to wait until I had a conversation with my lender for them to explain to me, this doesn't mean you're just financing an extra $30,000.
No, it's out of pocket.
Like I had no idea. So then I'm like, okay, yeah, I don't have another 30 grand to put down on top of everything else I'm putting down. So, thankfully I was doing research again. I was just literally Googling what happens if in this scenario. And then that's also when I realized this was, June-ish of 2020. So it was a time where there was a lot of uncertainty and people did not know if they were going to have their jobs much longer or if no one knew what was about to happen. And so I thankfully was able to come to the conclusion after all the research I did that this isn't just going to be a problem for me because we were under contract significantly less than the list price. And then the appraisal came in even more under what we were under contract at. So if they have to go back on the market and they try to get another buyer, the same scenario is going to happen again. So thankfully I had that kind of aha moment and came to that conclusion to where I had to call my agent, the listing agent, and say, look, they're going to have to come down. I'm not overpaying for this. And we both know, like, we don't know what's about to happen. It's June of 2020. It could keep going down. If you go back on the market, you could get an even lower appraisal a few months from now.
Sure, yeah.
So thankfully I was able to figure that out, but yeah, I had no idea.
Yeah. One thing that people don't realize is an appraisal is a opinion of value of that specific individual that goes out to view the home.
Yes.
I've had an appraisal on the same property done a week apart and showed a difference of value of $50,000. And it was just because I think the house was messy one time. There was a bong sitting out, and I'm pretty sure some weed. And I'm like looking at these appraisal pictures. I'm like, dude, what? And it was a buddy of mine, and it was his house. He was doing a cash out, and it looked like someone just did a raging party the night before. And I'm like, what is this? I'm like, I don't know what happened, but that could be why it's so light.
Yeah.
Clean it all up. Get rid of the bong, hide it, and let's try this again. And then it came back and it worked. So it's kind of crazy, but
Well, I think the thing with that people have to remember is appraisers are also professionals that are qualified to conduct an appraisal,
Sure.
But they're humans too.
Yeah, they're supposed to stay within
Yes.
the box, but sometimes,
Yes, and that's something I've always been so conscientious of for my listings is it doesn't matter who's walking through that front door, like first impressions mean everything, and you want it to smell a certain way, you want it to feel a certain way.
Smells.
Yeah, I mean,
Candles going.
we live in Florida, put the AC down, even if no one's living there, you want to make sure there's no concern with,
Musty smells.
yeah, the AC works, it's pumping during the heat, and it feels nice in here. Like, there's just there's a feeling you want it to feel like when you walk in that house, and there's small things you can do to make it work.
Absolutely. So one of the things you were also telling me about, how many houses have you owned? Is it 2?
2. I recently sold my second one.
And you said that you did house hacking with it, right?
With the first one I did. So again, learned so much from this first transaction. It's like, it was so stressful, but I really, in the long run, am so grateful for the way things worked out. Like I mentioned, I had to put a lot more down in the house than I was expecting.
Sure.
So I totally depleted my savings.
One other thing that people don't know about portfolio products is the rates are not as good as a tradition. It's probably at least 1% worse.
Yeah. I think mine was a full percent higher.
It's probably a full percent, if not more, worse.
So not only was I putting more down, significantly more down.
And there's credit restrictions. Like a lot of them don't allow you to have a credit score under 680.
Yeah, I had really good credit, which that's something if you're thinking about buying a home one day.
But I'm saying if you were in your position and you had a 640, which you could technically go FHA, and you would still lose all the money that you spent on the appraisal and the inspection. I mean, that's $1,500, $2,000 that you would be out.
True.
So, but yeah, the interest rates are a lot worse.
So my monthly payment it wasn't crazy, but it was a little bit higher than I originally thought it would be. And then I also had to put...
Well, what was your rate back then? Like 4%?
It was originally supposed to be, I want to say 3.3. And then with the portfolio loan, it was 4.25.
Yeah, rough.
But at the time, over 4%.
Yeah, it was crazy.
I'm like, this is horrible. This is so much.
Crazy.
Like, this is not good.
I remember because I was watching the rates tick up and I was giving people rates in the 2s, right? And then my gut like sank when I had to say something with a 3 in front of it.
Yeah.
And people were like, a 3. I'm like, I don't. And then 4 hit and I felt even more sick. And then it went all the way up and it like touched 8% for like a few days. And now it's starting to come back down. Thank goodness. But
so now it probably feels pretty good It
feels a lot better than, it's a lot easier to tell someone a high rate knowing that they're coming down than telling people that the rates are going up. They just don't want to hear it. And I did some new construction properties where the properties were a year out, right? And I would qualify them at like 3.25, and by the time they were closing, it's like 4.875-5%, and they don't qualify for the home anymore. And they're like, "What can I do?" I'm like,
"Yeah, what happens in that situation?"
They're not. You don't get a good phone call.
I'm sure.
I mean, the builders. We would try to work with the builders to like try to buy the rate down as much as possible and see like.
Do you guys offer locking in a rate for that long of a time frame?
The company that I was with did not. So Embrace Home Loans does do a 12-month lock. We do that. The company that I was with prior to did not have a long extended lock. We had like a 3-month, but
okay.
I mean, these homes were taking 18 months to get built, so it was way too far out.
Makes sense.
But yeah, so it was kind of a nightmare. But back to the house hacking thing. Yes. Sorry, I went down a tangent. Did you enjoy doing that? Because what was that about?
So, house hacking is the new like trendy word to just basically describe purchasing a primary residence and having a roommate, having someone live with you to help subsidize your mortgage. And I was not originally intending on doing that because I didn't have to at first. And then the way things ended up going, I didn't care to have a roommate because I was living in my dream house, basically. Like, I was so excited. So I ended up renting a room out to a friend from college, and majority of my mortgage was subsidized by her rent. Mm-hmm. So even though I totally depleted my savings with this down payment, I was, I think, paying only a few $100 a month to live there.
That's crazy.
Yeah. So it's if you can
rent today comparatively.
If you can if you can like stomach that, because it's hard to go back to a roommate if you've been living by yourself. Mm-hmm. But if you can buy a house that you really want to be in and you can find someone to live with you that you will enjoy living with or won't, as long as you're not miserable, do it, because it is not only going to save you money on the monthly income or the monthly bills and income and all of that, but you're doing something that you otherwise would be renting and totally like missing out on any type of appreciation, which when I purchased, there was an insane amount of appreciation, like record highs of appreciation. But if it didn't happen that way, if it wasn't 2020, there's still, to this day, if I still owned it, I would have had a good amount of appreciation that I would not have had. So.
Well, everybody's like, oh, the market's gonna crash like 2008, blah, blah, blah. It's not, first of all. But if you think about it, when the market crashed, yes, it did go down significant amount. But if you had that same house that you paid peak price in '08 till today, I think the homes have like doubled or tripled in price since then. And it's going to continue, right? As soon as these rates pull back down, there's going to be another big spike of volume. And if you bought today, you're going to be making a lot of money on appreciation in 2 years from now. And I can basically guarantee it. I don't have a crystal ball, but
No, I totally agree. And of course, we can't say anything for certain, but what is certain is that you're not going to lose money. That's the thing with real estate in general as an investment is I kind of personally capitalized on using it as a short-term investment, but that's not normally the best way to do it, and it's not what most people do. If you hold it for any amount of time, but especially long term, there's just no way that you don't reap some type of appreciation.
I mean, there's especially, again, that's why up front I asked you, what do you see as the next up and coming area, right? Because it's all about location. So if you buy it in the right location, I mean, if you go buy it out in the boondocks, right, where it's not going to appreciate for 20 years, whatever. But
it still will though.
It still will, but not as drastically, right? So it just depends. But I mean, you gotta find the home. I personally would rather find a dump in the perfect spot that I can renovate than finding someone else's flip.
You never want to be the nicest house on the street.
Correct.
And that's whether you're an investor or first-time home buyer or looking for your dream home. You don't. If you're willing to do any type of work, you'll be a lot more. You'll be a lot more safe if you're willing to not buy the perfect house and do a little bit of work. But even if you're not willing to do work, just don't be the nicest house on the street.
Yeah. So for 2024, what is there anything that you want to focus on specifically?
I think my goals for this year are to, one, have a little bit better of a work-life balance. And what's funny with real estate is that things get super intertwined because I get to work with friends, I get to work with family, and then also I really love what I do, so it doesn't always feel like work, even if I do end up working 7 days a week, 12 hours a day. So having some type of boundaries, but not having those boundaries in the beginning has definitely propelled my career. So it'll be a learning process.
Awesome.
Sure.
Well, I appreciate you coming out today. And if they want to find you, what's the best way to contact you?
You can reach out to me on Instagram. My Instagram handles Amber Sells Tampa Bay. I also have a new website that will be launching in the next, hopefully, week or so, and that'll be my first name, lastname.com. So
how do you spell your last name?
Amber, Amber, Matherne, Matherne.com.
Perfect. All right. Well, thanks for coming out, and
Thank you.
See you next time.